and welcome to another edition of BSN's The Long Story Short. This episode, we will be talking about something that has ties to the very roots of blockchain technology itself, a technology that was designed to decentralize power and democratize key decision-making. Still, even more than a decade after Satoshi's white paper first was released, we are still seeing protocols challenged by the issue of blockchain governance. To discuss this today, I'm joined by Katherine of Tezos, Anne of Oasis Labs, and Daniel, who is the founder of Lightbulb Capital. I think it would be best if we started by having you guys maybe give a quick intro of yourself, and then we can move on into the questions. How does that sound?
Sure. Hey, everyone. My name is Anne. I'm the COO at Oasis Labs. Oasis Labs is one of the earliest contributors to the Oasis network, which is a proof-of-stake network focused on privacy and scalability. The design makes it much faster and much lower gas fees than Ethereum, and we have privacy and confidentiality at a smart contract level, so it allows you to run and use sensitive data on the network. So thrilled to be here, and obviously can go into more detail on the governance model we've worked on and where it is now and where we expect it to go in the future as well.
And very cool. And you're joining us from the States today?
I am, yeah. So you can see it's still sunny outside.
Oh, nice. Daniel, do you want to go next?
Sure. So my name is Daniel Liebau. As you can tell by my accent, I grew up in Germany. My angle to blockchain is I teach a class on digital assets and blockchain technology in a university here in Singapore. I'm also quite active researcher, so I've got papers on issuer transparency, for example. I'll go into that a little bit later in the conversation, I'm sure. Also researching the topic of security tokens, and have been involved with blockchain as a investor and sort of ecosystem participant since 2016. So glad to be here today.
Excellent. Thank you, Daniel. And our final, last but also equally important, Katherine, would you like to introduce yourself?
Yeah, sure. So hi, everyone. My name's Katherine, and I head up marketing in the Asia adoption entity for the Tezos ecosystem. It's called TZ APAC. So Tezos is basically the world's first self-amending blockchain that enables on-chain governance. We are very thrilled to be here and look forward to the interesting discussions that will ensue. Thanks, Ben.
All right, Katherine, why don't you start us off by telling us a little bit more about the governance model that Tezos is using and what features you think that makes it stand out or particularly robust in this situation?
Yeah, sure. So firstly, obviously Tezos is a public blockchain. It's proof of stake, one of the earliest proof of stake chains actually to go to market. And in terms of our number of validators, it's unlimited. So we don't have these like set, limited number of validators that some blockchains use, like EOS, for example, or Hedera. And in terms of voting rights, yes, it's based on how much coins you stake to help secure the network. But users that have, say, smaller amounts can choose to delegate their coins to their preferred, validator of choice, which we call bakers, depending on how they choose to vote on governance proposals. Yeah.
Okay.
To make it more democratic.
Thanks, Katherine. What about you, Anne? How is Oasis Labs doing things?
Yeah, so Oasis is a proof of stake network, and so one of the things I'd say is while we do scalability, we don't need. It's very different than sharding. So a lot of sharding networks that claim to have scalability, the goal is like you need thousands of nodes at a time. Ours is basically designed so you don't have to do that. So the way ours is set up is there's a decentralized validator set at the consensus layer, very similar to Cosmos, actually. And so right now we have 100 independent validators, and the way you get into that set is based, it's stake-based and stake-weighted. And so basically the top 100 based on their delegation and stake are a part of that committee. That committee then has a couple ways that they can participate in governance. So one is we actually just released an on-chain governance module. So for major issues that would be related to an upgrade, they can both propose and actually upgrade on-chain. And then in addition to that, we have at the moment off-chain community governance. And so we use a number of community forums to essentially manage and get a sense of how to vote on community-led initiatives, including our roadmap and getting approval for that, how money is spent in the marketing world, et cetera, et cetera. I think obviously our goal is ultimately to get that all on chain, but doing it in some modular way to make sure that it's clear. The other long-term vision we have is, as a confidentiality network, there's a real opportunity to use private voting as well. I think we've seen a lot of issues in the blockchain space where particularly whales are able to sort of cajole others when they make big votes. And so in the long term, we think having a confidential smart contract that manages voting would be, one, cool, and two, a really good way to ensure that we're getting clean votes where you don't have people sort of colluding together in the same way you might in a public vote. So excited about that for the long term, and we've seen governance work well, in the short term as well.
Okay. Yeah, I think a lot of people are familiar with Tezos and what they do because they're in the news a lot for their projects. But I'm curious with like Oasis Labs, it's more of a an infrastructure layer, I guess, for governance. I guess, would that be accurate? And if so, like what sort of clients or protocols are using Oasis Labs?
Yeah, so not really. So Oasis is a layer one network. So it's a proof of stake network similar to Ethereum or Tezos. I'd say we're smaller, of course. We're a newer protocol. We just launched on mainnet in November. And so we our two tenets are we've designed the network in a way that's much more scalable. So the way that it works is there's a consensus layer, and then we basically run consensus and compute in parallel. So unlike Ethereum, where you actually have to wait for compute to happen and then that hits the consensus layer, these can actually run in parallel, which helps reduce latency issues. It helps reduce gas price issues. So that's been one real benefit. And the other is we have confidentiality, as I've mentioned, built into the smart contract layer. And so what that means, we actually use a number of different privacy technologies. One is called trusted execution environments. So the nodes that the validators run actually have a portion on the chip. It's called a secure enclave, and confidential data is actually run and analyzed in that part of the chip. And so this allows us to run really complex and sensitive data on the network. So most of the use cases we've seen on our network relate to the use of sensitive data. So things like healthcare data, machine learning modules that use a huge amount of data from individuals, credit scoring. In the DeFi space, we've seen and are seeing more and more of this being developed now, but things like private DEXs are in the works where you can actually obscure the trading flow and transactions to prevent front running, for example. So there's lots of different use cases that we're seeing right on the network today.
Okay, that's a very broad spectrum. So that's
yeah, totally.
Okay, Daniel, why don't we get you involved? I'm kind of curious on your thoughts. Have you seen anything really interesting in the governance space in terms of which model, whether it's proof of stake or proof of work? What are your thoughts on that?
Sure. So I think it's interesting to see, because when people talk about governance, immediately we only focus in on like on-chain governance. But I sort of agree with previous comments from Anne that there's probably some way to go where we cannot do it all on chain yet. And I think one very, very important aspect of enabling proper governance is actually creating transparency. So if I'm a cryptocurrency issuer, I need to not only have a mechanism for people to vote, right? Because that's kind of only one part of the governance, but I also need to make sure that I create enough transparency about my activities, my funds, and how I'm going to use them and how I'm going to deploy them. So that's sort of what we put together in our latest paper on this minimum disclosure requirements that recently also got published by MIT Press. And I think Tezos, for example, does a really good job because they have a biannual report. It's almost like an annual report of a corporate, right? That says, okay, these are sort of the projects that we're sponsoring, and then this is our treasury, and this is how much Tezos we have, and this is how much Bitcoin we have. And I think that's super valuable because it informs a potential token holder about the financial and non-financial situation of the ecosystem, right? So I think it's really a matter of, yes, having some sort of a fair on-chain voting mechanism, but then also creating the transparency around it so that people can make informed decisions.
Okay, and thank you for that explanation. Just in case anyone is unfamiliar with the topic, could you give like a really quick explanation of the difference between on-chain governance and off-chain governance?
Sure. And then jump in here if I get it wrong.
Yeah.
Basically, if you look at mostly proof of work sort of based platforms, right? Then there's a social media sort of a community that will basically have to discuss and decide the roadmap or the trajectory of the development of a network. So it's not really enforced on the blockchain itself, versus other systems like perhaps Polkadot, or I think Polkadot and Tezos are probably the most advanced at this stage, that have really baked in this on-chain governance into their system. They have a whole mechanism for people to vote, and there's rules on how to perhaps propose some new functionality, and how do you bond certain amount of your stake to propose something, and then how does the actual voting process work that you can then also document on-chain by signing a transaction. So I guess these are the two sort of different ways to do it.
Yeah, I remember a debate coming up about a month ago when Uniswap had a vote to move to a layer 2, to deploy on this layer 2. And then a lot of people were kind of chiming in like, well, what actually forces the protocol to actually do it after the vote? But that was a case of people voting off chain in like a forum environment. And then the I guess the centralized part of the process, then enforcing the vote on social media. So I think we'll get back to that a little bit later. But well, actually, yeah, let's jump into it now, because I think this combination, there's a big kind of focus on this right now about, is it true democracy happening on chain, or is it kind of sometimes kind of a show to fake democracy to make people feel like they're involved in the protocol and to incentivize them to take part? What are your thoughts on that? Maybe we can start with Anne.
Yeah, I think it totally depends. I mean, obviously, I think it's hard to envision a world where even for on-chain protocols, everything is on-chain, right? Like, I mean, we're doing this session, obviously, off-chain, right? So I think so much of what you think about for governance, there's so much more to it that goes into it other than just a vote. And so regardless of whether that vote is happening on-chain or not, most of, I think, the work of a community and building a technical community especially is off-chain. It's about building relationships. It's about bringing teams in and getting them excited, and then really about those teams taking off on their own. And so to me, I think the most important aspect of this is empowering and making it possible for engineers and developers across the board to get involved and to make it easy for them to do that. And from there, I think you see what happens. Now, of course, with all systems that are stake weighted, it's a weighted democracy in some ways. So even when you're thinking about these votes, those who have more tokens essentially have more power, and that's how most networks have run to date. Which is there's some weighted piece there. I think the piece that's probably that you're referring to is there's some off-chain discussion that might happen between teams to get people sort of on your side. If anything, that's probably the most democratic process, right? Like when we think about the political system in the US, it's not like senators just walk into a room and press a button. There's a lot of discussion and negotiation and debate that happens behind the scenes. And in many ways, that vote is simply codifying an agreement that you have. So in many ways, I think whether it's on-chain or off-chain, it's very similar. To me, the main difference between on-chain and off-chain is a question then of what types of things you think you are enacting and at what point you're making an investment. It's challenging, I think. The most true on-chain votes are those that the code is done and the vote essentially activates the new feature. Obviously, that can't be true for non-technical things like marketing features. It can't be true for even voting to invest in a feature. And so even when you think about systems that are wholly on-chain, there's always going to be an off-chain piece of this, which is actually doing the work that can be enacted to vote for that resolution. So we're all working in, I think, some spectrum here regardless.
Yeah, it's a really good point. Don't be afraid to jump in at any point.
It's wrong, challenge me.
I'll add something to that. No, agree with what Anne said. And I want to add on to what Daniel said as well about transparency. Whenever a proposal is suggested and made and the decision happens on chain, I think the beauty of it is that it's codified, right? Like the proposal is going to be like in smart contract code. It's like a DAO. That's an evolution of on-chain governance, and people can't, tweak the policy that's being put forward. It's there, it's transparent for everyone to see, and you can't like manipulate the proposal in some ways and have like your cartels. Yes, you will have these discussions off chain, like how would you vote, but essentially like the policy's there, right, for everyone to see. Yeah. And then when it gets executed on chain, like you can't change it last minute, or like, the code will just execute, self-execute, right? And I agree with Anne, like how are you going to execute like in a real world where you can't have a blockchain application? Then that it speaks to the evolution of blockchain tech, like how are you going to continue innovating with new projects?
Yeah. One interesting proposal I saw earlier this week was in the Curve, the DAO. They were suggesting that they go after people for copywriting. I think it was Saddle Finance, and then they wanted to open a lawsuit against them, which is an interesting part of the governance that, maybe it's not really something that the protocol wants to be focusing on, but then the DAO is pushing them to do this. So you open up, with true democratization, you open up a lot of avenues that could be very productive, but also counterproductive at the same time. All right, maybe we can move along. I think that one thing that we have to talk about in the space is like with proof of work and the mining situation, and we're seeing it with Bitcoin. Obviously, there's a large concentration out in China, particularly, where I think more than 50% of the hash rate was concentrated before recent rules. How do you guys feel about this in terms of being able to decentralize power, but you still end up with these kind of groups or specific regions that concentrate a lot of the power? Is this something that you guys are trying to discourage, or is this something that we should be afraid of, or do you just let it kind of go naturally?
Specifically, regional concentration.
I think it's communities or regional. I think that anything in particular.
Yeah, I mean, I think it's something that you need to be aware of. Like, I think the bigger concern are simply that you have a bunch of whales that are making decisions for everyone. And I think there's a couple ways in my mind that one can combat that. So one is, I think, the larger validator you set that you have, and the more opportunities for those validators to earn tokens, I think the better off you are. So incentivized testnets, especially when you're thinking about what can the foundation and entities that support the network do, incentivized testnets are a big part of it. I think investors spreading out their delegations as well is another big part of it. So there's a lot we as a community have agency over to avoid that type of concentration up front. Of course, I think for any proof of stake network, this is a real concern. I mean, I think if you look at Cosmos, it's something like the top, I don't want to misquote this, but something like the top 10 or 12 validators hold 2/3 of the network. And so there's a trade-off there, right? Like on one hand, that makes it much faster in terms of making decisions and moving forward. On the other hand, there's certainly more risk involved in that. So there's some balance that you have to strike. When we were designing the network, we actually had this a pretty rigorous debate ourselves about whether we should have stake weighted or flat voting. And what that meant was, once you make it into the top 100, is the voting power that you have still based on how many tokens you have staked or delegated to you, or is it all equal at that point? And it really comes down to a trade-off of latency, which is this question of like, if you need 100 votes or 66 votes in our case, so you need, or 60, I guess 67, you need more than 2/3. Will there be risks if you're truly waiting for that group, or is it really much fairer to say those who have more stake do have a bigger say? So we ended up going with stake weighted, and I think honestly what we found is it hasn't made a difference right now. We have all of our upgrades have been almost instantaneous, so not a challenge for latency, but I think something we're constantly monitoring as a community. So Yeah, I think it's a concern. I haven't seen it actually lead to anything in practice that has been hugely risky in the proof of stake space. But I'd be curious what Katherine thinks. That Tezos has obviously been at this longer.
Yeah, we're also stake weighted. And in terms of distribution, we have about 450 validators across the network. Yeah, and we use a delegation model. So delegators become part of the voting process so we can decentralize the network further. Compared to other proof of stake chains, okay, EOS is 21, Solana is 150. So there's always trade-offs. Yeah, like you said, it's latency versus centralization. So but so far it's worked for us. And we, I guess, like took a good call when Tezos decided to design its blockchain based on proof of stake, which Ethereum is trying to migrate to now from proof of work. So proof of stake is more energy efficient and enables more decentralization, more people to participate in the network because you use less energy. So there's a lot of conversations around being more climate conscious in blockchain design. So there's the eco-friendly aspect to it, and people are becoming more conscious about it. Yeah, which is great when they participate in the network.
Daniel, you're on the investment side of things with Lightbulb Capital. Is there something you look at when you're looking at projects and evaluating them to decide, okay, is this decentralized enough, or does that really not factor into your decision making?
Oh, it totally does. And it's interesting. So I want to pick up on this point that Katherine started to talk about ESG, right? So everyone talks about ESG in the media, but actually it's all about E. But then this call is about G, right? And then so we've been starting to sort of think about what does that actually mean in the context of a blockchain, right? Because if you think about it, governance in a corporate setting is very different, right? Because there's a team of managers that basically have to enforce or adhere to certain governance principles. But then in a public blockchain is community governance, right? And then how does that even translate? So I think definitely how the consensus mechanism works plays a key role, and the validity and finality of transactions is something that we definitely look at. So while probabilistic type consensus mechanisms are dominant with proof of work and proof of stake, other networks started to use deterministic models, right, where you have instant finality. So we like those. But then it's not only about the G, right? It's also about the S. So I guess I want to throw that in here because it fits quite nicely. Another thing that we research and also use in terms of sort of investment decisions is the distribution of wealth. And I think Anne just mentioned, the concentration in Cosmos, for example. So we're thinking about, there will always be concentration of wealth, and let's not kid ourselves, right? On blockchain, outside of blockchain. But the extent to which that exists, you can measure, you can calculate a Gini coefficient the same way you do that for an economy. So we look at those numbers not only because we're interested in the welfare of the society on that particular blockchain, but we also believe that if more people are incentivized to participate in decision-making and developing of a network, the stronger the network effect will be for that network to grow, right? And I guess the last thing I want to kind of throw in there is we have sort of two different problems. One is, yes, large stakeholders may drive the decision-making process, but then the second problem is really, how do you actually get the people that are genuinely interested to participate in the process, right? Because now we have lots and lots of small token holders that basically are just, greedy and in a Telegram chat, and they're asking when moon, right? And they don't really add a lot of value in that sense if you want to drive forward your ecosystem. But yeah, I'll stop there.
that was actually. Go ahead.
Oh, I'll just say, I mean, sure, but I'll press you on that, right? Which is to say, that's no different than any democracy, right? I mean, you have people that you have people who are in elected positions, you have people who are engaged, yet, a single person who doesn't have a ton of voting power, and then you have people that aren't that interested but know they have that power. So to me, I always sort of think of it as like, there's some foundational mechanisms, but you need all of them, right? And so I think what I found is the community that is less daily engaged often gives us the best bellwether of how things are going in a broader sense, like what's hitting, what's not. And I mean, sure, sometimes you disagree, just as you would if you were constituents, right? But like, I think it's in aggregate, you often find that there are things that are really important, and many individual community members have led to proposals to build things, including, Dan, we were talking about this earlier, but including a new wallet, given some bugs we found in one we had.
Yeah, fair enough. I think maybe I need to clarify a little bit. So I'm not saying that the small token holders don't matter. What I'm saying is that there are many small token holders that do not really care about developments on that particular blockchain ecosystem beyond anything that impacts the price instantly, right? And if you take a little bit of a longer view, and you're right, it's the same thing as in a normal democracy, right? Those voters that do their homework and make a very conscious decision and bring suggestions forward contribute more, right, to the ecosystem.
Totally.
Right?
Yeah, totally.
That's kind of where I'm coming from.
Totally.
Yeah, I would add to that. Yeah, what Dan highlighted, the when moon when Lambo crowd, it permeates the space. It's pervasive, but there's also a growing mainstream consciousness around NFTs. So it's been hitting the headlines a lot, and we see a lot of NFT adoption in the Tezos ecosystem, and people actually creating DAOs on top of that. DAO, for example, is one project on-chain. So it's really interesting to see how this evolves, right? Like, I would love to see a creator economy that actually actively votes on things that they're excited about. And NFTs can have multiple use cases. It can be art, it can be audio rights, it can be
data,
digital pieces. Yeah, it can encompass anything. So it's just a unique token. So I would be curious to really see how this evolves. Yeah,
I think it's a really good point. It's a great way to bring more people into the system for sure. DAOs have been a very cool way of seeing that. So totally agree.
Yeah.
All right, you've hit on my two next questions, kind of. You've hit around there. So why don't we focus on them? Let's go to the first one, which is incentivization. Like, how do you get people to actually, especially if there's like associated on-chain costs of doing this, right, to go take part? Because a lot of people, they don't take the time to get educated and learn about things. So how do you get them to care, right? And I'll bring up a story, like I think 2 weeks ago on Bancor, which is one of the earliest DEXs. They have these votes to extend rewards for people who are staking on the platform. And there was some upset people in the community that people weren't voting. So you have to have like a minimum quorum reached in order for a proposal to pass. And some of these were not hitting this. And so I guess out of maybe frustration, actually the motives aren't entirely clear. Some of the larger, earlier holders were voting against everything, just so that people would wake up and realize that their rewards are now disappearing if they don't, take part in voting. So this was, it was a great issue of, the challenges of democracy. And I'm really glad that you keep bringing up kind of the American side, because there's a lot of parallels between setting up a government in real life and then setting up one on the blockchain. But yeah, how do you get people to care and to vote on things?
Katherine, you want to go first on that one?
Yeah, it's to me, I see this as a pure coordination game. Like within the Tezos ecosystem, anyway, we need a 80% supermajority vote to pass any proposals on chain. So what we do is actually like nudge, like, hey, vote, and it's like a chain effect, like vote. Yeah, so the proposal gets passed, and we normally do these proposals every quarter. It's a process within our ecosystem. So that's how we do it, and it's a sign, right? Like how active your chain is. Like if people don't pass the if the vote is not passed, like then it shows that, okay, something's not working in the governance process here. What can we do? Yeah. So far, it's been working well for us. Yeah.
Yeah. No, I think what you're saying makes sense. It's like you need all the things. It's like really good communication, really good consistency, so people have some expectation of what and when they're needed for, and a clear process for how to do that. The other thing I'd say is it goes hand in hand with building a strong community, I think, as you pointed to, Katherine, which is it can't just come from the foundation or the organizations that founded the network. It really has to come from everyone in the community. And so the more and more I've seen our validators feel empowered themselves to be involved and engaged and to even push back on things like roadmap features, the happier I've been. I saw a quote actually yesterday from someone on Twitter, I think it was Balaji, that said, the scary thing is not, or it was basically protocol drama is a sign of engagement. Protocol silence is something to be worried about. And so I think that's totally true.
100%, yes.
All right, well, in blockchain, there's no shortage of drama, so I think we're in a good spot then.
True.
Okay, I'm curious specifically for like Tezos, but maybe also for Oasis, like when you have enterprise use cases and maybe you have some sort of like government organizations or NGOs or you have NFT marketplaces, right? These are all very different use cases and very different needs, and the things that they would particularly want won't be the same as maybe the smaller token holders that we discussed. So how have you found aligning the decision making so that everybody considers not what's best for them, but what's best for maybe you guys, the driving the business development or the technological development? How do you balance that?
Yeah, no, that's a really good question, Ben. So for us, for example, enterprise use cases require privacy features. So for the Tezos ecosystem, we added the Zcash's sapling privacy protocol to our code to have shielded transactions. So that's one use case. And then we also have, enterprise type of kits where you can just spin off nodes, and of course BSN is one prime use case for enterprise, where we are integrated with the BSN network. There's also Open Minter, which is like a toolkit for enterprise developers to use, so they don't have to start building a node from scratch. And then whereas for individual users, we encourage them to use wallets just to get a first sense of onboarding into the Tezos ecosystem. So they can do self-staking, they can delegate their stake to a baker. So this is how we are trying to address different segments of our audience. It's a fine line, right? Because in terms of building an ecosystem, you need to have like developers of different skill sets from different backgrounds, and it's quite a task building an ecosystem, and that's what I find fascinating about the blockchain space. Yeah.
Yeah, I mean, I would just add, I think what you pointed on, Katherine, is that technical design and governance actually go hand in hand. When you think about designing a network and rolling it out, it really actually matters how you do that when you then think about how to implement voting. So one way we've approached that is our design is actually very similar to Polkadot's, where you have a consensus layer, and then we call them paratimes, but they're similar to parachains. And so what that means is it can actually be much more custom depending on the developer and the design. So for us, most of our enterprise customers use, which include like BMW, and we have a large healthcare system, social network that are using it. Those all use a particular paratime or will that where there's a bit more of a permissioned aspect to the compute layer, and so there's a bit more of a feel that I think they would feel more comfortable with, and so that's, I think, a good balance for them. Whereas obviously for more blockchain focused developers, they use a paradigm that's fully decentralized, and it happens to be very similar to the Ethereum environment. So trying to provide different options depending on the need. One thing we've also found with enterprises is many of them, I think, have aspirations to be on a totally open network with their applications, but there's some sort of like transition periods that you'll need to think about. And so having them start first on some sort of permission network and then slowly moving to a fully open network is a process in itself, but one that if the network is designed properly, you can onboard correctly and bring them along the path.
That's really interesting, that point. And when you have discussions with big enterprises like BMW, does this kind of topic come up? I mean, are they concerned about the base layer, the consensus there, and how they can make sure that, what they're building today is still going to be viable 5 years down the road?
Yeah, I mean, I think for us, the way we've approached enterprise is much more like use case or problem set focused rather than like we're a blockchain. And so I would say like it comes up when we think about, so we offer like privacy solutions, and sometimes they, and they connect to the blockchain, right? That's sort of the, for different benefits that have to do with the public ledger, and they have to do with some sort of immutable audit trail. And so I think when you orient around that, it's easier to bring people along because the benefits are so clear. And they're things that you really can't get even on a permission network. And so, yeah, I mean, it's always a discussion, but I think many we found are actually very eager to get to the network, but they have, reliability questions themselves. Similar to a validator, they want to make sure it works. So, every network starts with test nets, so validators can make sure it works and test it out and report bugs. And, I think developers are no different. They want to make sure things work for their own customers before they bring them to market. So I think of it actually very similarly to that.
Okay, great. Dan, did you have anything to add on that?
Yeah, maybe two little points. So corporations that take a genuine interest in the nitty-gritty bits of how an actual public blockchain works are great. But I would also say that we need way more than we have right now, because sadly enough, most managers will just go, well, smart contracts, that's Ethereum, right? And that's where it stops. So there's a whole issue, the same issue that you encounter when you engage an audit, like a Big Four audit firm, right? So if you have one of those and they have an issue, it's like, well, but they are the biggest one, so don't blame me on taking the decision, right? So there's a bit of a risk-taking mentality required to deviate from the consensus, funnily enough, and take something that is perhaps more suitable for you, right? Because other technology like perhaps Oasis or Tesla is perhaps superior even for your use case, but then it requires that leap of faith that it really makes a difference. That's one thing. And then the second thing I wanted to highlight is, obviously, as an educator, I'd say that which blockchain you interact first time round when you are in school makes a massive difference. It's like learning Windows or Unix, right? So if you get in touch with Unix first, well, then you're gonna see the benefits, and if not, then you won't. So I think one of my recommendations to protocols is you need to figure out how to get into universities and make sure that the first thing that CS students learn about in their blockchain 101 class is your protocol, because people will then own it and be very familiar with your system rather than just going with the mainstream. So that's something that will probably take a few years to pan out, but yeah, maybe two important points.
Okay.
Yeah.
We're coming up on the end of the hour, so I wanted to get to one last question before I let you guys give some closing thoughts. And it has to do with the way that these protocols generally work, where they start out slightly more centralized because it's very advantageous to be centralized at the beginning when you have to make a lot of crucial decisions very quickly. And then there's always this kind of promise that they're going to, decentralize later. Dan, how do you feel about situations? Is that the right approach? And do you have any like sort of, hesitation to get involved with projects like this, or do you see that as a good thing?
I like to see a clear path to decentralization, because when people just say we'll do it later, it's not so great. So I would probably quiz a little bit on, the actual milestones on how to get there. But I do also see the benefit, especially when you sort of bootstrap and you don't have much, that you keep your governance rather centralized. I'm a little bit more concerned with, the funding that's related to it. I think in the past few months, we've seen very large tickets by some of the top VCs go into utility tokens or non-security tokens. And that's when we kind of circle back to the beginning of our conversation, where we talk about the concentration of wealth and power, right? So that is something we look at more. And in the recent past, there are some examples where you can clearly see that if somebody structures their fundraising in a way that they have diversity and it's not just, the same old big three firms in there, they will succeed. So that's sort of interesting.
Totally agree. I think more people with stake in the game, I think, makes any network stronger and better. So I think it's really important. I think there's just some like physics that go into when you launch, but I think the more and more decentralized the network can be when it launches, I think the better off it will be. I mean, Tezos is the shining star example of this. So it's been, I think, cool to see them as a model. Tezos and Cosmos as really good models for this to follow.
Just to add to what Anne and Dan said, we actually started in the opposite direction. We started off with a decentralized network first, and then enterprise interest followed after. So for us, the main concerns that we saw with these enterprises are, who are my counterparties? Is your baker in North Korea? Or how do we KYC these guys? So we had to create private mempools for them to transact and to kind of work with a set of validated bakers that are whitelisted. So that was one of the things that we had to encounter along the way. But we do agree. Yes. Decentralization is the way forward. Yeah.
Okay. Why don't we do this? I know that some of you have a hard cutoff and you need to get off, but why don't we give Anne and Katherine a chance to talk about how we can get involved in their respective protocols from a governance standpoint, and then we'll let Dan have some closing thoughts as well. Anne, do you want to go first?
Yeah, of course. So if you're many ways to get involved, I'd say instead of spouting out all of them, I would say just go to oasisprotocol.org, and there's a number of links to Telegram. Slack is where a lot of our developer stuff happens. Our forums and voting are in GitHub, and you'll find information there about running a validator, getting involved, building apps, etc. So oasisprotocol.org is the place to go.
Yep. For Tezos, go to tezos.com, and you'll have the developer portal there, and how to get started as well, with social media links too. If you are based in APAC, in the APAC region, go to our Twitter at TZAPAC. Thanks.
Cool.
Okay. And Daniel, how can people, learn more about you? And you mentioned you're an educator, so how can people follow that and yeah.
Sure. I mean, I don't know. Just Google my name, I suppose. But no, on a more serious note, I think I'm trying to post a lot of interesting stuff on LinkedIn. I know it's not the most blockchainy sort of platform, but that's where I'm active. And then please stay tuned for more research on the ESG side of things, because I think that's something that in the recent past I've been thinking about a lot.
Right. Any other closing thoughts?
Well, thank you so much.
All right. Well, I'll let everyone get back to their busy days, and look forward to catching up in the future.
Thanks,
Ben.
Yeah,
thanks so much, Ben. Really appreciate it.
Bye-bye. Thanks, guys.